Hello and welcome. In this lesson, we will be looking at a problem from the homework where we are given specific transactions that occurred over the year, and we will convert that into an accrual-based net income versus a cash-based net income number. When preparing financial statements, a company can use the cash basis or the accrual basis method. Typically, only smaller companies use the cash basis method, such as a mom and pop store. However, for purposes of all your accounting classes and the CPA exam, we will be using the accrual basis unless otherwise noted. Just a quick recap, like the name states, the cash basis is based on cash movement. When you receive the cash, you record income, and when you pay the cash, you record an expense. Alternatively, when using the accrual basis, income is recorded when earned, and an expense is recorded when it has actually been incurred. For example, if I was a CPA and I was preparing your tax return in March, under the accrual basis, I would record the revenue in March. In April, I would bill you and receive your cash payment in April or May, but I would still record that income in March when I have actually earned the money, not when I actually received the cash. Using the accrual basis, an expense is recorded when it has been incurred. If I was a corporation and I had to pay my utility bills, let's take electricity as an example, I am utilizing my electricity in the month of March before I actually have to pay that bill in April. Therefore, I would record an expense in the month of March for the electricity, even though I do not pay for it until April. In this example, we are given a company with select transaction that occurred in year 2 and year 3. As you can see here, we have some amounts billed to customers in year 2 and 3, some cash collected from customers, and then various expenses that were paid. These are all cash disbursements, cash collections here. Additionally, it also tells us a few other facts: that the company incurred advertising costs of $27,000 in year 2, and they owed the advertising agency $5,200 at the end of year 1, and there were no liabilities at the end of year 3. Also, there were no anticipated bad debts on receivables, and the rent payment was for a 2-year period, year 2 and year 3. So let's start creating. They want us to create an accrual net income for both years and determine the accrued advertising liability at the end of year 2. Let's start at year 2, which is right here, and let's start creating the net income for that year using the accrual basis. Well, the first thing we're going to do is we're going to record revenues. And that's just going to be the amount that we actually billed to our customers, not the amount we collected. So that's going to be the $370,000. Now let's look at our expenses. We don't have any more revenues. Well, they give us cash disbursements, which means cash payments. And we have to determine what was actually utilized in year 2 versus actually being paid. So the first one they tell us is payment of rent was $82,000. However, in the detail, it tells us that the rent payment was for a 2-year period, year 2 and year 3. What that tells us, that $82,000 is really for 2 years. So I paid it, the company paid the $82,000 in advance. So they paid half of that is for year 2. And then the other half is for year 3. So I'm going to just put that in the year 3 column. I'm going to let me just make this font all the same, all 14, and none of it be bold. Okay, and let's make it all into Arial font. Perfect. Okay, and then I'm just going to quickly do this. Okay. Our next expense, rent. Salaries paid to employees for services rendered during the year. Well, these are salaries paid for services rendered, so meaning the employees actually paid and we incurred that expense because they actually worked. So we owe them that money and we paid it. So that is actually what was incurred. So salaries for both years, I'm going to put this one here for year 2 and this one for year 3. And then the next thing was utilities. Also, it just doesn't give us any additional information about the utilities. Therefore, I'm going to just assume that whatever I paid is what I incurred. So I'm going to put utilities in here. Is that for the year and this for year 3. Next, we're supposed to put in the advertising expense incurred for each year. The problem tells us for advertising, these are the amounts paid for year 2, $16,000, and year 3, $37,000. The problem also gives us some additional information, and using the information, we're going to figure out what the actual expense incurred was for each year. I'm going to go ahead and do that right here on the side, right here. So the first piece of information that we are given is the amount that was owed at the end of year 1. So this is basically the accrued liability at 12/31 X1 is what we're given. And that the problem tells us right here it says the company owed the advertising agency $5,200 at the end of year 1. So we're going to start with year 1. At the end of year 1, we have $5,200 liability. Oh, I'm just going to put that there. And we're going to work our way to see what happened in year 2 and then what happened in year 3. It also tells us the advertising costs that were incurred in year 2, which were $27,000. You learned that the company incurred advertising costs in year 2 of $27,000. So we learned that. But so because we learned that advertising costs incurred, that's really the year 2 expense. And next, we're going to say the problem also tells us the amount that was paid in year 2, and that's given to us right in the problem for the cash disbursements right here. It tells us what was paid in year 2 and year 3, and we can see that in year 2, we were paid $16,000. We paid $16,000. This will allow us to figure out the liability at the end of year 2. So when we add all those things up, and I make it black, I can see that my liability at the end of year 2 is $16,000. Accrued liability at the end of year 2 is $16,200. So I'm kind of working both ends of the both questions at the same time because they are really interrelated, and I think it makes it a little easier, hopefully. Just trying to get these aligned with these lines. So I'm just going to continue on to year 3 just to finishing the end of this. So we have the liability at year 2, and then for year 3, we are told the amount that was paid. So that's given to us in the problem. So that was $37,000. And therefore, we can figure out we can back into the advertising expense for year 3. So this is going to be the year 3 expense. Another way to look at this, which some people might prefer, which I know I prefer, is looking at the T accounts, and we're just going to start with a 12/31 X2 as the starting point. Let me just do this real quick. As a starting point, we know that our accrual at the end of year 2 we calculate as $16,200. And then we know, oh gosh, this is, sorry. And then we know that also what happened in year 3 was that there was a cash payment made for advertising at the end of year 3 right here. We were told that it was $37,000, which would reduce our accrued liability. We would debit accrued liability by $37,000 and we would credit our cash. And then finally, so that was cash payment in year 3 was $37,000. And then we were told that in this additional information that there were no liabilities at the end of year 3. So we know that the end of the year 3, here, if I look at my T account here, my accrual was 0, we're told. So if I had a starting accrual at the end of 12/31/X2 of $16,200, and I had a payment for $37,000, which would be a debit, and then the end was 0, I know that I have had to have had an accrual for $20,800. That just makes that to 0. So I would have a credit accrued advertising liability, and that must mean that my debit was to advertising expense. So therefore, when I look at my accrual net income number and I look at advertising expense for year 2, we calculated that to be up here was $27,000 for year 2 and $20,800 for year 3. So let's just put $27,000 for year 2 and $20,800 for year 3. And now we can start calculating our net income for each of those years. So this is year 3 right here. I'm sorry, year 2. So year 2, we had revenues of $370, and these are accrued expenses. So I'm just going to do minus the sum of these numbers. And so our net income for at the end of year 2 is $128,000. Just going to highlight that for net income. And then year 3, we're going to put the same formula, but for the revenues, for the revenues that we earned, I just didn't put that into the year 3 column earlier. That's going to be the amounts billed to customers, which is $470,000. So I'm just going to do that right there. And then we have our expenses for each of those years. This is going to be year 2, and this is year 3. So now we know we've done all that the problem asks. Calculate accrual net income for both years. Well, here's our answer for year 2 and year 3. And determine the amount due to the advertising agency at the end of year 2. And that would mean that's our accrued liability at 12/31/X2. And that answer is $16,200. So hopefully when you do the problem for homework, you'll be able to work it out.